Good afternoon, everyone, and thank you all for being here today. My name is Hamad Almoajil, and I'm a first-year student, actually. And I'm delighted to have this opportunity to share with you my PhD research so far. My topic is about financial technology, or FinTech, if you like, and how financial technology, or the development of financial technology, especially in the past 10 years, has resulted in systemic vulnerabilities and governance challenges in the financial services industry. Financial technology, without a doubt, is transforming the financial services industry on a global scale, and it has been anchored by infrastructure advancements such as AI technology, cloud technology, blockchain, big data analytics, and smartphones. Existing or startup fintechs first, and then traditional financial institutions started providing us with an array of products and services. These include digital wallets, mobile payments, buy now, pay later, access to international markets, robo-advisories, and the list goes on. Now, the growth rate of consumer adoption has been staggering. The speed, relevance, personalization, just the convenience behind these services and products. It increased processing time and reduced transaction costs. So there is no wonder that we all use one or more of these services today. The growth of fintech, though, increased the complexity in the financial system. And that's mainly due to their size, their interconnectivity, and their borderless nature. And in turn, that complexity resulted in complex trade-offs between financial stability, consumer data protection, and regulatory compliance. Some of the governance challenges, prominent governance challenges that we saw in the literature review include algorithmic opacity, or the lack of transparency in decision-making, rapid automation, the speed and velocity of these transactions, creating too fast to fail and too connected to fail scenarios. And finally, the regulatory lag, where fintech developments often outpace regulatory responses. I mean, fintech grows exponentially, while the regulation is linear at best when it comes to tackling these issues. Some of the very famous real-life examples of failures include Sam Bankman-Fried's FTX, the payment system Wirecard in Germany, some crypto assets such as Celsius, Terra Luna, and even here in Bahrain, the crowdfunding platform Safaqat, maybe you've heard of that as well. So basically, therefore, it is essential to prioritize quality corporate governance due to the impact of digital players on the financial industry. In order to investigate these phenomena, my supervisors very wisely asked me to start with a systematic literature review. And the SLR was aimed at four things mainly. First of all, understanding these fintech unique features that give rise to systemic vulnerabilities and governance fragility. And also, obviously, we looked at the systemic risks themselves, the governance challenges as well, and finally, the theoretical underpinnings or the theories that were used in the various papers that were selected out of this SLR. The SLR was executed using the scientific procedures and rationale as a combination of the scientific procedures and rationales and the preferred reporting items for systematic literature reviews and meta-analysis. And that ensured or increased rigor, transparency, and reproducibility. A systemic coding process was completed as part of the content analysis. The content analysis was the information was either manifest or latent. Manifest information was easily extractable and easily reportable, as well as things like theories, region, type of paper, publication, journal, rank, and it can be reported with a high degree of accuracy. On the other hand, latent information requires the researcher's judgment and analytic tools, such as, for example, the relationship between fintech characteristics, systemic risks, governance challenges, regulatory responses. In order to look at that connection, we use the ACM framework, or the Antecedents, Consequences, and Moderators framework. where the antecedents were the actual fintech characteristics resulting in the consequences, which are the challenges and systemic risks, and then the moderators, which are the regulatory and governance responses. SLR had 5 contributions framed through the TCCM framework or structure. First, theoretical expansion. It moves beyond the default reliance on agency theory to incorporate other theories such as systemic risk theory, institutional theory, stakeholder theory, actor network theory, network governance theory, regulatory theory, in order to better understand the fragmentation, or fintech's interconnected nature. Second, geographic imbalance. Research is heavily centralized in high-income countries, UK, US, China, limiting generalizability to emerging markets. We have fintech-specific governance attributes, and it identifies automated decision-making, high-frequency data integration, and platform scalability as key risk drivers. The methodological rigor, which is the combination of this Part 4 and PRISMA as well. And finally, it's an agenda-setting exercise for scholars, policymakers, and regulators, highlighting underexplored areas like algorithmic oversight. This is why we did the SLR, is to come up with gaps. And to my comfort, there was consensus among scholars when it came to these gaps. And please do allow me to read. First, the first gap relates to the incomplete understanding of fintech systemic effects and the need for clearer specification of the mechanisms through which technology-driven finance destabilizes the financial system. And based on that, we investigate what are the distinctive characteristics of fintech that amplify systemic risk and governance fragility. The second one relates to the geographic imbalance in existing fintech research, where it concentrates on high-income markets and overlooks emerging markets. Based on that, we ask why examine the bank fintech dynamic specifically within an emerging market context such as Bahrain. The third one relates to addressing the identified theoretical fragmentation and the persistent gap between descriptive regulatory analysis, which is what we have right now, and the rigorous governance theory application. And based on that, we ask how do disruptive technologies interact with formal institutions, informal governance norms, and public policy frameworks within an emerging market ecosystem, such as Bahrain. And finally, the last gap pertains to the calls for proactive, contextually informed regulatory design rather than the reactive compliance, and for deeper empirical investigation of the effectiveness and unintended consequences of contemporary regulatory instruments. And based on that, we ask, how effective are the existing regulatory approaches in balancing innovation incentives with systemic risk mitigation? Based on the SLR and the gaps that were extracted, the questions that were formulated, we came up with the following aim and objectives for this research. The aim, analyze fintech features that heighten systemic risk and reshape governance in Bahrain, while the objectives, identify distinctive fintech characteristics that amplify risk, examine bank fintech interaction dynamics in an emerging market ecosystem, such as Bahrain, build a multi-theoretical governance framework that goes beyond agency theory, and finally, evaluate adaptive regulatory approaches that balance innovation with risk mitigation. Why Bahrain? Bahrain has a developing fintech ecosystem. That's first of all. Second, there is a lack of scholarly work related to fintech in Bahrain. There are 4 interrelated dimensions that underscore Bahrain's relevance. First, we have a vibrant fintech ecosystem. The Bahrain Fintech Bay serves as an incubator, accelerator, brings together regulators, startups, fintech startups, existing financial institutions, even academic institutions. Second of all, we have strong governmental involvement and regulation. The CBB has established the FinTech and Innovation Unit, which is tasked with overseeing, supervising, regulating these fintech startups and their products and services. Furthermore, they established the FinHub 973, which is a regulatory sandbox, cross-border regulatory sandbox, actually, to test out these products, before enrollment to the public. Third, we have an evolving technology infrastructure. Bahrain adopted the cloud-first policy in 2017, and 2 years later, Amazon Web Services opened their first regional operations here in Bahrain. And finally, we have an emerging fintech culture. We here in Bahrain love using fintech products. I'll be surprised if any of you don't use any of them. And added to the, we're becoming a cashless society at a much faster pace than a lot of the developed countries out there. I'm talking North America, Europe, Japan. We adopt fintech much faster, at a faster pace than a lot of these. Methodology and grounded theory rationale. The methodology is qualitative, and that's because it requires in-depth perspectives and interpretations of complex, context-specific social and regulatory dynamics. It is exploratory by nature, subjective, interpretive. And grounded theory was more specifically chosen because it aligns with the objectives, really. Systemic risk objective demands systemic data collection. Ecosystem dynamics objective needs iterative social construction mapping. Multi-theoretical framework objectives benefits the hierarchical integration of these strands. And regulatory adaptation objective requires contextualized, memo-based insights adhering to the principles of theoretical sampling and comparative analysis by Glaser and Strauss. Future research directions, hopefully, developing composite multi-dimension measures of fintech and governance quality, extending geographic coverage to include underrepresented regions and diverse regulatory traditions, such as here in Bahrain, analyzing the complex system dynamics and interconnectedness of the financial ecosystem, examining how governance channels affect the social impacts of fintech, including digital inclusion trade-offs, and investigating the effects of AI-specific regulation on algorithmic transparency and accountability. My next steps, hopefully after the symposium, first of all, is to obtain the ethical approvals I need for data collection, publish the systematic literature review, hopefully in the Journal of Research Policy, which is a very highly ranked journal, so I'm looking forward to the rejection, but I'm looking forward to their comments as well. Commence semi-structured interviews with fintech firms, banks, regulators, so I'll be coming after your contacts as well. Perform grounded theory coding, constant comparison, and memo analysis, and hopefully draft the findings within the next coming year, my second year, inshallah. Thank you so much.